People, how you doing? Welcome back to Stock Up with Larry Jones. For those of you that are new to the page, go ahead and hit the like, subscribe, and the notification bell. Make sure that you're not already subscribed. At the end of this video, make sure you check out my two links. Make sure you don't fall for any spam in the comment section. Anything that says AMZT or AMZ anything, it's spam, all right? So let's go right into it. Good morning. Anybody out there? Listen, they are on CNBC. They're interviewing Cathie Wood without an S. Let's see what she's talking about, and then we'll come right back.
Most attention to 5.3 in February. It's down to 4.6. And with all of the price declines that we are seeing out there, whether it's in retail because of too much inventory or way up the pipeline with commodities really falling out of bed, all of them, we think the inflation rate is going to be surprisingly low. We would not be surprised to see deflation month to month sequentially for a number of months during the next 6 months.
Does that mean that you are betting that the Fed eases up in a way that they have not signaled thus far?
Absolutely. I think they do not appreciate how much demand destruction has taken place out there. But this holiday season, I think, will be telltale that way. And so I do think we're looking at a major pivot. If we're right that deflation, and we've been saying this for a while, so consider the source, but if we're right that deflation, both for cyclical reasons and for secular reasons, all we do is look at technology and the cost declines associated with different technologies, and they're massive. So we think that inflation during the years ahead is going to surprise significantly on the low side of expectations.
And then how do you think that the Fed balances both the issue of credibility, given what they have signaled about the market, with the data that you're suggesting they're not appreciating just yet?
Well, I think they have been basing their outlook and their policy on two lagging indicators. Seems they've been paying more attention to the CPI year over year, which is still at over 8%. And employment. Both of those are lagging indicators. The leading indicators, which are all in the pipeline, easy to see right now, are all saying that prices are going to come down. Inflation certainly will come down, but I think the big surprise out there is the number of months we will see actual deflation, negative prices. And it's not just because of the U.S. In fact, we're benefiting from the flight to safety from the rest of the world. What's going on in China is highly deflationary. What's going on in Europe, the same. This energy is a huge tax on that continent. One of the other things that's happened in the last in the last week that I think is fascinating is that both Japan and China have basically supported their currency, and they're basically saying no mas. And in order to do that, what are they doing? They're selling dollars and buying their own currency. So effectively, China and Japan are doing some of the easing that we think the Fed will do, increasing dollars in the system.
So, Cathie, what turns things? Right now, the conventional wisdom, you're already saying we're in a recession. The conventional wisdom or prevailing view is that we're headed into a recession if we're not in one right now, and it gets worse, not better. You're saying that there's going to be a turn, and I'm trying to understand what is that pivot point, the inflection point that moves things in that direction.
Sure. We think employment is going to come down and the unemployment rate up. The Fed thinks so as well. That's a lagging indicator, a big lagging indicator. And we do believe that CPI-based inflation, especially because of energy, food's sticky, no question about it, but energy prices are coming down against all expectations. I would also say, there's so much bearishness in the market. Today, we see Goldman Sachs and BlackRock saying, sell equities. Oh, my goodness. This is like, I remember, this was very early in my career, 1982, Business Week magazine on the front cover saying equities are dead. And now you have some of the biggest houses out there who would tend to benefit from a positive equity market saying Equities, don't go there. We think that the surprises, again, both inflation and interest rates, are going to be significant to the downside. And we do think, even though we are in a recession, that it won't be as extensive. It's going to be much more of an inventory recession as we get interest rates and inflation down.
And Cathie, and therefore we see the market move higher as a function of multiples which have come down, or we see earnings actually improve. I mean, when you start to look at your own portfolio, and we were looking at some of this this morning, since ARC started, the S&P is up about 81%. You're up about 83%. The mix of stocks obviously so very different, but in terms of trying to outperform the indexes, how do you think about that?
Well, for us to be even ahead of the S&P after such a trashing during the last year, you're certainly looking at endpoint sensitivity here. I guess it doesn't surprise me, but what it says is if you look out from here, if we're right, we're going to take off from that 83%, and we believe much faster than the S&P 500 is, for two reasons. One, we're focused on the right side of change, innovation, disruptive innovation. And two, the traditional benchmarks are very backwards looking. And so what is disruptive innovation going to do? It's going to disrupt them. So I would expect the gap to widen significantly from here.
Cathie, you're announcing a new effort today with Titan around investing in private companies.
Go, good people. The forever bull, Cathie Woods. Man. Well, she's talking about deflation. Of course, we're facing inflation, and she's talking about deflation. One of the things I've learned as I, get older day by day is that you don't throw the baby out with the bathwater. Meaning, she is a brilliant woman, and some may say that she's a little cray-cray. I would probably agree with that, but some of the information and some of the data that her team has put together is actually extraordinary. So I'm of the mindset that you can learn something from everybody. Okay, disruptive technology, or the type of things that she invests in. I'll say this again. I'll say it right now. Some of the plays and calls that she has made, I thought was absolutely crazy. I would have never done it. But I'll say this. In some, not all, in some of the calls she's made, she's not wrong. She's just extremely early. I'm going to leave it at that. Hey, Bitcoin is back up, good people. And, well, it's hovering. It's fighting. It keeps fighting to break above 20 and 20K, and I believe it did. The pre-markets are up. Let's look at the pre-markets. As you can see down here, you see Bitcoin is up. It's actually up over 20. As you can see, the Dow in the bottom right-hand corner, as she's talking, the Dow is up 333 points. Let's see the pre-markets. Sorry about that commercial. Yeah, let's just look at the pre-markets with all of that. Look, Dow is up really good, 312 points at this time. S&P is back up 37.19. The NASDAQ, as we can see, is up. Looks like it's going to be a green day. Let's just look at some of the headlines. Just look at this. S&P, stock futures rise, S&P 500 and Dow. See this? Dow hits bear market after today's sell-off. You see here all of the good news, stock market news live update, stocks future surge after S&P slides. All of these indices are looking good today. And, after a while, the sell-off has to end. And so there we are. I just wanted to come on this morning. I have to run to the airport. I'm going to Vid Summit to learn how to do this even better. I'm striving to give you guys everything that I got. It's not a vacation. I will be in contact with you guys, okay? So pray for me that I have safe travels. But just wanted to let you know everything that's going on. The dollar has stabilized, but so has gold, right? So when the dollar, so what's happening, good people, it's like this. When people are in fear of what's happening to the stock market, they run to cash. When they run to cash, the dollar gets stronger, right? So they start selling equities, stocks, and crypto this time. So the dollar is strong right now. And what happens is when the dollar is strong, gold tanks, right? But we ain't scared, we prepared. So what do? So I think that we're about 6 months, 6 to 8 months ish away from the hard recession. Okay. And I just want you guys to know that that's not fear mongering. We have to also know that the stock market does not bottom exactly when the recession bottoms out. Okay. A lot of stocks will have bottomed out already and start to recover. Equities can only fall so low. So I see these as opportunity. I see where we are now, especially with the tools we have to kind of peek a little bit into the future. Nobody could time the bottom. Nobody can time the top. We could peek a little bit and make our plans. Now, we have to understand that anything could change. I still think that we will have a bounce. I think that November will be a good month. I think that, before October is ended, that we could kind of see a little turnaround up until the Christmas rally. Okay. Remember, this is still the worst, historically, the worst trading week. So it could be green today, and by Friday, it could take everything this whole week. I don't care if it's Monday, I don't care if Tuesday, Wednesday, and Thursday is green. Friday, it could sell off and sell everything off. But I would not overreact in fear or in favor, because it is typically the worst trading week. So I expect it to be a volatile week. I do. I'll take today. I love days like today. But remember, when we are we're in the fourth quarter, right? We know the Fed is hawkish. He keeps raising interest rates. He was slow to raise interest rates. He actually should have started raising interest rates last year. I think third quarter, at least by January, he should have started. But now he's late. And his knee-jerk reaction is actually causing a problem worldwide, right? There is no way for the American stock market to be going through this much turmoil and it not affect the rest of the world. You got the USA and you got China. Same thing with China. If China's real estate, when it really, 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 truly implodes, it's going to affect us. But we look for opportunity here. There's always, always, always money to be made. For those of you that have been shorting the market and you've been shorting correctly, you've made some money. You could make money doing puts, right? And that's a way to make money. But I would only suggest that to those of you that know how to do options correctly or short the market correctly. If you're a beginner, don't try it. Learn what you're going to do first before you invest your hard-earned money. But one thing we do know that works, and that's dollar cost averaging. And yes, some people say, hey, would you wait until next year? I want to end by saying this, and I'm going to take 2 or 3 of your questions. Here's the facts. The facts is this. The average American, if you're investing $5 a day, let's say you started 2 years ago. I don't care if the stock market has been going down for the last 2 years. That person that started 2 years ago will have more than you if you start right now. And I'm just talking about the $5 a day type of deal, because you're going to Starbucks that $5 a day away. You're going to eat it away. You're going to shop it away. You're going to anything. That's just money you're going to waste. And the truth be told, time in the market does outweigh trying to time the market. But you have to understand, when the market rebounds also, that's when those people that started 2 years ago, their money will rebound. And so the facts is instead of just trying to time the market, Just get in. It's like double dutch. Just get in. All right. Let's see what we got going on here. I've been up 15 minutes. I got to cut it. I had to let you guys hear what Cathie Woods was saying. What's going on? We have a big dip towards the end due to the sell-off. Oh, yeah. It's going to be a lot of tax harvesting towards the end of the year to sell off. Tax harvesting. I'm going to, every year I have experts on, CPAs, accountants, and tax professionals. I will be having them on in the fourth quarter to help you guys with your tax loss harvesting. Okay. I have a real question. All right. So what's the most profits that I have made off of one trade? Man, if I said I got to keep it real with y'all. The most profit I ever made off of a trade was a crap coin called Shiba Inu. And I hate to say that because I understand psychology trading. I went in big, but most importantly, hear this, I came out. With Shiba Inu, I made almost 200K. I think I made like 180K off of a crap coin. And we're going to, I know I hate to mention a class. I know you guys are going to say, when is it going to be ready? I talk about psychology trading in there. And so it was also the most riskiest play that I did. Okay. So that's how much I made because of the size of the money that I put into it. All right. But remember, something as boring as a bank, I made 800% by dollar cost averaging and holding since the worst of 2008, since the worst of the recession that actually went from 2007 to 2009. So just remember that. All right, what else we got? All right, so he's saying Microsoft, Nvidia, Google, VTI. Which one would I choose? All of them. I have all of them. And I know you're going to say that's an easy answer. I would, if you, long term, you can't beat VTI. Okay. You're not going to beat VTI long term because you're just not that good to beat the market. So I would start with VTI. I would start with VTI number one, Google number two, Microsoft, and in that order. That's me. Everybody has what they have. Okay. Appreciate that. What else? Cause of Meet Kevin. No. If you go back, Meet Kevin made his Shiba Inu play one day after I did. I'll say it publicly. He made his play after I did. And we invested about the same amount. Go back and check it. For those of the people that's been following me, I was actually the first big page to touch that because it was dangerous. So I'll just want to set the record straight. I was early into it by one day before Meet Kevin. All respect due to Meet Kevin. Thank you. Yep. You're welcome. Give me one more question. Yes. So yeah, I did it. It was a bold move, but it was part of my psychology trading. When I was doing psychology, I was talking about being early to the party, but I was also talking about taking profits. Never, ever be afraid to take profits. And here's what I do about taking profits. I know this is going to be a long live. Listen, when I take profits in a stock or crypto, I remove it from my watch list. And that's what you have to do right away. Remove it from your watch list. You cannot drive forward looking backwards. So what'll happen is if it keeps running, then you keep looking back. And what happens is you'll get in the second time, then you'll get burned. Leave me a comment right now if you've gotten into a play, won, got greedy, got back in again, and then lost the second time. Leave me a comment. That's me. I've done that plenty of times. The truth of the matter is when you get out, that was when you should have gotten out. The biggest problem that most of you had over the last 2 years was not getting in, it was actually getting out. Leave me a comment. All right. Hey, George Taylor, how you doing? Everybody say good morning, George. I believe you are a veteran, George. I think I read that. So if you are a veteran, thank you for your service. God bless you. You know what? I'm going to be putting something together with Stocks with Josh. He does a way better job of explaining it than I can. So I'm going to be putting something together. But there's other guys that's on YouTube that will teach that for right now. All right? No, I don't do any private mentoring. I will have a class coming out. I will have a class, but that class is going to be for the beginner, the ultimate beginner, right? Doesn't matter. It really doesn't matter. Look at the performance of VTI and VOO. It really doesn't matter. I would probably just a little bit go over VTI. All right. Hey, good people, I'm going to leave it right there. And you have a blessed morning. I got to run and hop on this flight, and I will try to come back to you tonight. And I'm going to be, while I'm at this conference, I will be making videos from my hotel room. Like I said, it's not a vacation. It's work, right? Hey, thank you so much. I know it's just a lot of people just wasn't there, and but I did. I'm going to say this though. A lot of people led people into hype coins and that type of deal, but they didn't lead them out. I was one of the few that said, hey, I kept saying it's time to take profits. And not only did I say it's time to take profits, I got flack. For those of you that remember, I got flack for saying you got to sell, it's time to take profits. I did that in the market last year, before the sell-off this year, and I did it with crypto, especially the hype coin. I know it's not all crypto. I didn't see the crypto winter coming as early as it did. But with the hype coins, I said it's time to sell. Take profits, take profits. And listen, I'm going to leave by saying this. Whenever you hear the term to the moon, it's time to sell. All right. Remember that for those of you that are new. When you start hearing to the moon, it's time to sell. I was one of the ones that said, hey, it's time to take profits. They were like, you're crazy. Go back and watch the videos. As a matter of fact, I did a video called All You Need to Know About, Shiba Inu, and watch that video. I started out before I even made my first investment into it, saying that the only way you're going to win is to take profits. All right. I'm going to leave it right there. Good people. I love each and every one of you guys. One day, we'll just do a live-a-thon. All right. Have a blessed day. Markets are still good. Let's look at the markets. Yeah, as you can see, we still got Bitcoin still up 288 on the pre-markets. Let's do a refresh. As you can see, the Dow is still hovering around 300. Let's see how the day ends. All right. Hey, go out there on your way to work. Have a blessed, safe travel to work and back. Have a blessed day. Praying over you, your finances, your wealth, your health, your family. Hey, it's okay to smile when it's green day because the Lord knows we had enough red days. All right. Live, love, laugh. Hey, make sure you check out the links below. I have to talk about it. Weeble's where Weeble is where we're doing our dollar cost averaging in because they have the reoccurring buys, fractional shares. Okay. So if you want your $5 a day to set it and forget it, do that with Weeble, where we're putting our cash and cashing up, getting ready for the worst of this recession. We're doing that in Moo. Moo up to 15 stock. They're, up to $30,000 worth of free money. Just Don't do it just for the free stock in both, but do it so we could win. All right? Live, love, laugh, and learn.